thanks all for attending. It's going to be a 15 minutes fire chat on the LTIF. And of course, this is a hot topic at the minute, but we really want to focus and deep dive on the reason why we believe the semi-liquid LT will be driving the product going forward, and especially on the secondary investment strategy. I'm heading relationship management in IQEQ, and I'm pleased to have here Jean-Baptiste Bourdié, who is the co-founder of Otentiq. Jean-Baptiste, please feel free to introduce yourself and then spend a few minutes on describing Access Capital and your business.
Thank you so much, Riccardo, and thank you, IQEQ, for inviting us and giving us the opportunity to discuss about this hot topic. Otentiq, so we created Otentiq private market at the beginning of the year, in fact, which is a wealth-dedicated unit of Access Capital partners, aiming to offer friendly retail products to private clients and distributors. First of all, a few words on Access Capital Partners. So Access Capital Partners is a pan-European asset manager, French regulated, based in Paris, London, Munich, Brussels, and Luxembourg. Access has raised in aggregate more than 40 billion assets under management since its creation in 1999, sorry. With, I would say, two focus. One, which is the small cap buyout with more than 10 billion assets under management, and multi-manager infrastructure with 3.5 billion. I would say that Access is a leader in the small cap private equity buyout and a pioneer in multi-manager infrastructure. Currently, LP based are, I would say, more than 95% institutional, and with a strong willingness to access, I would say, private market and retail clients through the Otentiq private market brands.
Thank you, Jean-Baptiste. I think it's very nice to see that one of the larger sponsor is actually putting in place a dedicated business line to cover off for the retail capital. This is quite an unusual setup. Congrats for this move. As we all know, LTIF 1 was kind of a disappointing setup. There was constraint both on the distribution and investment side. Now there is a trend for the fundraising to pick up. We see that at the end of 2023, 14 billion was raised, and now we are close to 17 billion raised capital in the LTIF, with additional 3.5 billion raised in the year. And there is a lot of attention from private banks to continue offering new LTIF product in the future. And as you know, retail capital invest only 5% of the investment into the private markets, while they do represent 50% of the global wealth. So there is a massive upside potential on this. I think Otentiq is a first mover in the efforts towards allowing a broader access to the private market. Why do you think the semi-liquid product particularly is a good fit for the LTIF going forward?
I would say, first of all, there's a few topics on what you just mentioned. And just going back on the fact that we created, I would say, a dedicated brand and a dedicated team to address the retail market. We think and we strongly believe that having dedicated team to the retail is really key, in fact, for a few things. Covering institutional clients and covering retail clients is definitely not the same job. And in fact, having people understanding the different distribution channel, aiming to, I would say, train an educated distributor and end client is key. And you need to put resources for that. Implementation of LTIF 2.0, yeah, definitely is a strong and also key differentiator and a game changer, I would say, to address the retail market. As you say, the LTIF 1.0 has been disappointed, I would say, in terms of the number of funds, in terms of assets raised, and in terms of, I would say, answer that it will bring to the markets and to distributors. Lots of constraints here on investment side, on distribution side, which was definitely not, I would say, the right fit to address properly these markets. So LTIF 2.0 brings some answer. Our DNA within Access and within Otentiq, I would say, to is to definitely to finance the real economy and with a leadership position by financing small cap companies with diversified portfolio and with a multi-manager approach in infrastructure. We think that it's a key differentiator in order to create some large and diversified portfolio to address these markets. And second, the other, I would say, main topics, which is key, I would say, to address the retail market, is the ability to run some semi-liquid and evergreen funds. We think that definitely this LTIF 2.0 with the definition of the liquidity provision with some details on the way to manage liquidity is a key factor, I would say, to address the retail markets.
Jean-Baptiste, on the liquidity side, of course, the more liquidity you offer to your investor, the more performance you tend to give away. Mm-hmm. How do you as a firm find the right balance between allowing for liquidity but also allowing for a certain higher performance to your investor as opposed to the mutual liquid market?
Yeah, that's a good point because so as you mentioned, the finding the right balance between performance and liquidity is key. I think we need to keep in mind that in our industry and the private asset side, definitely the performance will remain the main, I would say, the main criteria to investments. So in order to address it, in fact, there's few things. So first of all, there's education. We need to keep in mind that distributor and end clients need to be educated that the assets are intrinsically illiquid. So they need to keep in mind that they will need to hold the asset for a certain period of time. In average, a private client and a retail clients hold investment for more than 5 years. So in fact, this is a challenge, but this should be addressable. The other way also to manage liquidity is to so there's we can talk about some technical issue, but so there's the RTS which has been published this summer. There's two annexes. There's Annex 1 and Annex 2. We strongly believe that it brings lots of clarification on the way to manage the liquid part of the semi-liquid portfolio. We think that, to be honest, the Annex 1 will offer more flexibility to GPs, but less visibility to distributors. So again, it will be a challenge to find the right balance between both. But it's a massive game changer.
And so we believe the market is pretty much concentrated at the minute on the LT side, with large manager really taking the biggest piece of the cake. Mm-hmm. Of course, this requires scale to execute efficiently. This requires a strong brand recognition. This requires a dedicated sales force, right? So knowing your history, you are a recent company founded earlier this year, how do you intend to reach out to this capital? And which is the preferred distribution model that you have in mind?
So there's few things, in fact, and there's few challenge here. So there's many, I would say, many distribution channels, depending on if you're talking about the wealth channel and the ultra high, or if you are talking about mass retail. And definitely within Otentiq, so actually we are working on the definition of the product offering, and we strongly believe that you need to have dedicated offer and I would say targeted offer depending on the distribution channel that you are targeting. So as we mentioned, so the wealth and the high net worth, I would say, will be more focused on closed-ended fund and feeder funds, because they know how to manage, I would say, liquidity. They will looking at more, I would say, quasi-institutional funds. Rather than that, retail, which will be more focused on liquidity and a more, I would say, simplified investment process, and which will be and where the evergreens and semi-liquid funds will be more suitable. One of the important things is that you need to understand is that, in fact, you can't address, I would say, the entire European market at the same way. if you're looking at, I don't know, the French market, you will need to have a strong relationship and a deep dive within the insurance company that you can also deploy with all the Luxembourg insurance, which is a bit more flexible, but then they have also a certain constraint. You have the Italian market, where you need to have a strong relationship with promotori. You have a deep dive understanding of the German market, where semi-liquid professional was a way to address the retail market, but which has, I would say, a very low risk appetite. So they will have all their characteristics, and that's why also we strongly believe that having, I would say, dedicated and specialized team is key to tackle this market.
The other point, thanks Jean-Baptiste, because the theme of the LPEA Insights conference is operational excellence. Mm-hmm. Of course, we are talking about a product that is putting together somehow the infrastructure of a close-ended alternative fund with the liquid investments, but also on the liability side. You may have a lot of investor and it's more close to a sort of a mutual fund setup. Mm-hmm. So how important it is for you to find the right partner, accommodating your outsourcing strategy, and how you see technology, how you believe technology will be playing a key role in the development of the ELTIF going forward?
Yeah, finding the right partners is crucial. Within Access and within Otentiq, we've always been focused on delivering performance and build portfolio construction. So we don't have, I would say, the DNA and the resources, I would say, to tackle and to address the retail market properly. So that's why it's really key and really important to find the right partners and to find the best-in-class platform in order to tackle it. So we at Access decided to launch, for example, a feeder fund this year with IQ as IFM and with a digital platform in order to address the IFS market in France, and which I would say tackle all the front to back, all the investment process, all the KYC, all the AML question that definitely for us, it's really important. We don't, as I said, we don't have the resources, and we definitely don't want to build in-house expertise, because it will be very expensive. First of all, it will take lots of time, and so finding the right partners is key in order to have most efficient time to market and most efficient cost structure.
Conscious of timing, so we also wanted to touch base upon the secondary strategy as a key strategy for the LT going forward. We know that the secondary has always been a way to allow liquidity, also in the close-ended fund. Do you believe the LTIF will accelerate the secondary strategy? And do you think we still have some limitation in the way we will promote secondary strategy within the LTIF?
Yeah, secondary, as you all know, is I would say the main asset class of the democratization and retailization of the private equity. But there's many, I would say, many challenges around the secondary universe. Most of the secondary large players are global players and doing a secondary LP transaction, LP-led transaction, and generally speaking, this transaction and this portfolio are global portfolio, which definitely not suiting the LTIF requirement. I would say so. The main challenge of the secondary led type of manager is absolutely not compatible, due to the fact that portfolio will contains lots of non-AIF funds, which is definitely not suited for LTIF, which is a key challenge. That is why, for example, to give you an example, lots of, I would say most of, or almost all the secondary evergreens, secondary evergreen funds are non-LTIF and eligible just for qualified or professional or semi-professional clients with a minimum investment of 100K. That's something, yeah, that we are running late, but we did not really tackle. But and I will not go back on the LTIF, but definitely having the opportunity to drop off minimum investment and to allow fund-of-fund structure, that's also definitely some key element of the new version of LTIF, which is a game changer to address these markets. And so going back to the secondary evergreens, the fact that large secondary LP-led managers, in fact, won't be able to do LT funds, in fact, is a real challenge due to the non-EU AIF component of the portfolio allocation. Within the small cap world, in fact, it's a bit different because lots of players are local. And so having the opportunity, it's definitely much easier to drop off the non-EU AIF part of the secondary transactions. That is why, in fact, we strongly believe that secondary small cap evergreens LT funds, that's something which is doable. That's something that we are working on, to be honest. We are doing some secondary transactions for more than 2 decades now. We have deployed more than 2.6 billion within secondary transaction on the small cap world. And almost all the transactions that we did are LTIF compatible. And that is why, to be honest, we are working with IQEQ on the setup of evergreens LTIF funds, actually.
Thank you very much.